days left for your upcoming examination of the JAIIB. So I'm hoping that everyone just started your preparation for the JAIIB examination. So if you're new on the Officers Adda 24/7, hit the subscribe button so that you can get regular update from our side, and download the Adda 24/7 so that you can get you can get everything at a one place. Okay, so let's start today's class. The very important thing I would like to discuss here, that our selection batch that is actually started, and you are going to get the mock test, e-books, live classes, as well as the recorded classes in this selection batch. And I say this is a last fresh batch you are going to get before your examination. So enroll fast, because only one or two classes that has been done. If I talk about the accounting subject, only one classes has been done. So you should just enroll fast here, and today will be the second class of your accounting. So be prepared for that and just enroll for this. Like, you will get the perfect classroom for your study, as well as whatever the content, that whatever the lectures we are going to deliver, that all just important for your exam point of view. That means we are not going to focus on just preparing for your 50 marks only. We are focusing on preparing for your 70 plus 80 plus marks in the examination. And trust me, still you can do if you still follow our lectures sincerely. Okay, so you only have to do, like, you have to apply the code, that is Y422, and with this code you are going to get the big discount on this batch. So enroll fast, and just do not forget to enroll for the this batch with this code Y422, and with this code you are going to get the big discount on that. So just hurry up, and because this is a last opportunity for you for enrolling in this, and today will be the second class, I repeat. Okay, so just join me there, right? Okay, so let's start the session with the very first question here, that is the expected rate of return on the bond if bought at its current market price and held to maturity. Look, when we talk about when we talk about the bond, you can understand bond always considered as like it is just issued by the government or the corporations for raising the fund. Okay, so for raising the fund, actually it is issued by the government, or you can also say for the corporations for raising the fund. That means for raising the fund, maybe that for the school infrastructure, that may be for the road construction. Okay, so there may be some projects that actually lined up for the government or maybe for the corporation. So for that, government and corporations just needed the fund, and for that, bond is actually issued. Okay, and it is just purchased, or it is just purchased by the general public, and general public is known as an investor in this bond. Okay, so when we talk about the general public is considered as the investor, and that's why it is a very important to understand this is known as an investor. Okay, and this government and corporations are known as a issuer. Okay, so when we talk about like any investor, okay, if when we talk about any investor is like hold this bond until its maturity, like if any investor, you can understand, if any investor is just holding this bond like till the maturity, then this is known as a yield to maturity. That means whatever the rate of return we are talking about, the rate of return is known as a yield to maturity. This would be the correct answer for this. Okay, so the correct answer, that would be the yield to maturity for this question. The expected rate of return on the bond if bought at its current market price and held to maturity, then it would be called just understandable as a yield to maturity. Okay, I hope it is understandable for everyone. Okay, next question. A bill of 5,000 is discounted with a banker for the 4,750. Whenever we're talking about like one of the feature of the bill of exchange, you can understand in the bill of exchange there will be the three parties. The one party is that is known as a drawer, another party who will known as a drawee, and the another party that is third party as a pay. Okay, so when we talk about drawer is just considered as a seller. Okay, seller who sold goods on the credit to the drawee, or you can also understand as a buyer. Okay, so seller just known as a drawer in this case, and like suppose that the bill like with the help of the bill of exchange, this transaction has been done. So suppose that before due date, this seller just needed the fund, or this drawer just needed the fund. Okay, so with this bill of exchange, he can just discount that with the help of the bank, and you can just understand here, bank just deducts some charges for that, and after that you can understand a bill of the 5,000 is discounted with the banker for the 4,750. So you can understand like this. Okay, so the bill is dishonored at maturity. So the bill is just going to be dishonor for that. So the DOI pays 60% of his acceptance. That means if the acceptance bill of amount that is of the 5,000 rupees, DOI only pays the 60% of that. That means DOI only pays the 3,000 rupees. 60% of the 5,000, that would be equal to your 3,000. Okay, so what is the amount of the bad debts you have to find out? Just it is a very simple to understand. Like suppose that a bill of amount of the 5,000 and the DOI only pays the 3,000 for this, so you can understand the correct answer for this, that is 2,000. There is some confusing statements that is given, so you just do not have to be confused there. You just have to understand the bill of exchange that is of the 5,000 rupees and the DOI pays the 3,000 rupees. That means the what is the amount of the bad debt that is going to be recorded like the under the statement of the door or the under the statement of the seller's book. So you can understand the correct answer, that would be the 2,000 for this question. Okay, next question. A sum fetched a total simple interest of the 4,500 at the rate of the 9% per annum in the 5 years. So what is the sum? When we talk about a sum fetched a total simple interest of the 4,500, this question is taken from the calculation of the interest and the annuities. Okay, so if I just talk about the very important thing that you have to understand, the formula of the simple interest, that is interest is equal to principal multiplied by the rate of interest multiplied by the time, and that would be divided by the 100. So in this question the simple interest is actually given to you, that is 4,500. Okay, the principal that you have to find out, the rate of interest that is given the 9, and the years that is given the 5, and the in the denominator side that is the 100. So you can understand, if I have to solve this, then this 9 and 5, this would just cancel out, this would become the 100, right? This would become the 100. That means the principal that would be your 10,000. That would be the correct answer for this question. This is how you have to solve the questions in the examination also. Just keep it simple, because you have an ample amount of the time in the examination. You should be like whatever the options you are just going to mark, that you should be sure that that should be the correct. Okay, next. A company that is considering the purchase of the piece of equipment that costs 23,000. So projected net annual cash flows over the projected life are given. So the cash payback period that you have to calculate, and this is a very this is a very simple to understand. Whenever we are talking about the cash payback period, it is simple about that. In how many years you are getting your investment back. Whenever we're talking about the cash payback period, is all about you only have to understand in how many years you are going to get your investment. You are going to get your investment back. Okay, so when you just how many years the investment is just going to back, that you have to calculate, and it is just simple to understand. Look, what the total amount of the cost of the project, that is 23,000. Now just understand, for the first year, that is a net annual cash flow. You can also say that that is a cash inflow. Whenever we talking about the term that is a cash flow always considered as a movement of the money in and out from the business. Okay, so whenever we talk about the cash flow, it is all about the movement of the money in and out from the business. Whenever it is just coming in, that means it would be known as a cash inflow, and whenever it is going out, it is known as a cash outflow. Okay, so this is a very important to understand. Now when we talk about the projected net annual cash flows over the projected life, you have to calculate here. So now you can understand, for the first year the net annual cash flow, that is of the 3,000, right? For the second year, the 8,000. That means this would be your 11,000 is just returned back into your business, but you needed the 23,000. You are calculating for the 23,000. For the third year, that is 15,000. So if I add here, that is 8 3 11, and 11 plus 15, that is 26, but you needed the 23,000 only. So in how many years you actually getting your investment back? Now you can just understand, if I talk about for the first and for the second year, like you are getting the 11,000, and you only required, like now you only required the 12,000. Okay, and in the third year you are getting the 15,000. That means in the third year itself you are getting your investment back. Look, now you have to be just calculate this. Now how you should just calculate this, just try to understand. Whenever we talking about that, you definitely taken the 2 years for that, and now you're just going to calculate like in how many, like after that, like in how many months, you can understand, you will just going to get your investment completely back into your business. So for that, you can understand, for a year, if I talk about in a year, you are just going, your inflow is a 15,000, but you required only 12,000. That means the simply you have to just write here, that is 12,000 divided by the 15,000, and that would be equal to 4 by 5. Okay, and that would be equal to the point 0.8. Okay, so you can understand here, this would be equals to your 2.8 years. That would be your answer for this question, right? Okay, that means in the 12 by 15, look, in the 12,500, 12,000 divided by the 15,000, this should be equal to the 4 by 5, and this should be equal to the point 0.8, and this is point 0.8 here. That means in the point 0.8 here, like you will just get this 12,000 rupees. Okay, so that means the complete, if I say the complete cashback period, that would be your 2.8 here. That should be the correct answer for this question, right? Next question. The passbook of a firm shows overdraft of the 10,000 rupees. You know, whenever we are talking about the passbook balance is given, the quickly you have to just write your cash book, and another thing that you have to make the table like this, that is cash book and the passbook. Now just tell me here that here you have written the cash book, just circle this and just circle this. Okay, so if I just talk about the passbook of the firm shows overdraft of the 10,000 rupees. Okay, so if I say the passbook of the firm shows overdraft of the 10,000 rupees, just right here, that is with a negative figure, because it is a kind of the liability that customer of the company or the organization or the firm, okay, that is taken. Okay, so here it is firm given, so you can understand firm has taken the loan of the 10,000 rupees from the bank. So that's why it is a kind of the overdraft that is written here. There's a slide here that is minus 10,000, and it is observed that the firm had issued the check of the 20,000. So if the firm issued the check of the 20,000, just right here, that is if firm actually issued the check of the 20,000, so it would be minus 20,000. Okay, now which has not been presented, that means the firm actually issued the check to one of its creditor, but creditor just did not represent at the, or you can understand, over the counter of the bank. So that means in the bank statement, this is actually just reflecting as a zero. So now you can understand, in this scenario, cash book balance is greater than or the more than the passbook. Then you will say the cash book balance is a cash book balance is a lesser than the passbook balance. So you will just write here with the negative figure, that is 20,000. For the second condition, it is written that bank has charged interest on the overdraft for 1,500. So bank actually charged the interest. So if bank is charged the interest for the 1,500, so you can understand on that date actually customer is not aware that for this transaction. So you can understand, and that's why we are just reconciling that. Okay, reconciling the simple means that to make harmony with, okay, to make harmony with the cash book to the passbook and passbook balance to the cash book balance. Okay, so now if I say, if the bank is charged the interest over on this overdraft, so you can understand, because customer is not aware of that, this transaction would affect as a zero for this. And now you can understand the cash book is a greater than the passbook, and with what amount, that is 1,500. Next, check of the 20,000 deposited with the bank but not credited. That means a firm actually deposited the 20,000 rupees check, but bank is not credited that. So you can understand, for this transaction, cash book balance is a greater than the passbook balance. So you will just write with the positive figure, because you are calculating for the cash book. So that's why we are just calculating with the respect of the cash book, like with the cash with the we are just comparing the because we are just going to calculate for the cash book. So that's why we are just taking every parameter with respect to the cash book. Okay, so now again, the fourth condition, that is given, the insurance of the 100 rupees has been debited by the bank. So 100 rupees that has been debited by the bank, again, because customer is not aware of that transaction, so this transaction would reflect as a zero in the customer's cash book. And you can understand, this is also like greater than the passbook, and by what amount, that is 100. Now if I just going to solve this, you will get this minus 10, minus 20, minus 30, minus 30 plus 20, minus 10,000, minus 10,000 and 1,500 and 100. That would become the 1,600. That means minus 10,000 plus 1,600. That would become the minus 8,400, right? So minus 8,400, and you know that now you just do not have to be confused that you have to just consider it on the debit side or on the credit side. Just you just do not have to be confused there. You have to understand whenever we talk about like the cash book, okay, so like what component you have to keep under the debit side of the cash book and what component you have to keep under the credit side of the cash book. Okay, so if I say this is debit side, this is credit side, so all the cash receipts we keep on the debit side and all the payments that we have to keep under the credit side of the cash book. That means this credit side is actually considered as a liability of the cash book, liability of the company, liability of the firm, or liability of the customer. Okay, so that's why, because it is just coming with a negative figure 8,400, so that's why we have to just mark this 8,400 credit side. Okay, so that's why you have to mark this option 8,400, right? I hope it is understandable for everyone. Next question. A firm has debited wages of the 5,000 paid labor on account of the installation of the machinery to wages account. The debit side of the trial balance should show total of the 1,84,500. So what it will be showing presently. Okay. Now just understand that what component you have to keep on the debit side for the trial balance and what component you have to keep on the credit side for the trial balance. Okay, so when you're talking about for the debit side, you can understand all the assets, all the expenses you keep on the debit side, and all the liabilities, all the income, all the gains you keep on the credit side of the trial balance. Now just try to understand. Here it is written a firm has debited wages of the 5,000. So first, just understand here, when we talk about a firm has debited wages, wages always considered as an expense for the company. Okay, and when we talking about the expenses, you can understand that we are going to record under the debit side of the trial balance, right? Now it is paid just labor on account of the installation of the machinery to the wages account. What it is written, a firm has debited wages of the 5,000 paid labor on account of the installation of the machinery to wages account. Okay, so you can understand by mistake company actually debited the wages account, but the company have to debit the machinery account. Now you can understand when we talk about the machinery account, that is where that is also the asset for the company, and we are talking about the expenses that by mistake we actually record this transaction as an expense. Okay, that means if I just talk about, if I have to record in this transaction under the machinery account, then you have to just record this transaction under the debit side. And the same thing you just done, you only just does the mistake, by mistake you actually just record this transaction under the wages account, but you have to just debit the machinery account, but you have to debit that. Okay, at the same thing you have done, like the amount is same, and we are talking about the balances here. Okay, so now you can understand the correct answer, that the debit side of the debit side of the trial balance should show total of this. So what it will be showing, you can understand the same amount it will be showing, because it is just recorded under the debit side. The mistake has been done only for that it is just recorded under the wrong account. Okay, so that's why you have to understand the correct answer of this, that would be the same 1,84,504. That would be the correct answer for this question. This kind of the question is actually asked in the examination, so you have to be aware of that. Okay, right? I'm hoping that everyone just understanding this session. Next question. An asset cost 2,10,000 and with a 30,000 salvage value that is given. Okay, so at the end of its 10-year life that is given, so you have to find out like its annual cash inflow are 30,000, and you have to find out like the cash payback period. Okay, so how we can find out, like in the previous question we actually done this type of the questions, like how to find out the cash payback period. Try to understand the very important thing. Whenever we're talking about the cash payback period, we only concern about that in how many years your investment just going to back. Okay, we are not considering, we are not talking about the salvage value or the useful life. We are talking about that how in how many years your investment will be just come back into your business. Okay, then we have to understand, like you having the investment of the 2,10,000 and the cash inflows you are getting for the 30,000, you are getting for the 30,000. Okay, so the simply you have to understand, you just do not have to be confused in this. The correct answer for this 7 years, because when we just divide with this 30,000, you will get the value of the 7 years. Okay, that would be the answer for this question, right? Next question. You have to find out the proprietary ratio here. Proprietary ratio is all about, whenever we're talking about the proprietary, you can understand we are talking about something proprietary or the shareholders or the proprietary fund. Okay, so proprietary ratio is all about, you can understand the shareholders fund. Okay, so shareholders funds, and it will be divided by the total assets. So the shareholders fund, and it would be divided by the total assets. Okay, so when we talk about the shareholders fund, what it is given, it is given the 15 lakh, because when we talk about the total shareholders fund, that would be equal to the share capital. Look, when we talk about the shareholders fund, you have to understand we are actually talking about the share capital plus reserve and surplus. Okay, so that is about your shareholders fund, and it would be divided by the total asset. Total asset, you can understand in the total asset, the tangible asset, intangible asset, current asset, non-current asset, all asset would be included here. So when we talk about the share capital, that is given the 15 lakh, and the reserve and surplus, that is given the 7 lakh 50,000. So this would make the 22 lakh 50,000, right? 22 lakh 50,000, and the total asset, that is given the 45 lakh. Okay, so what should be the proprietary ratio? Now you can understand this is the value of the 1 by 2, or you can also say that this is about the 50%. That means 50% of the total asset that is financed by the shareholders fund. Now try to understand, because it is all about like the either written it is, that is a point 0.5. Okay, you can just write it is a point 0.5, and you can also just write as a 50%. Just try to understand what it means. That it means that the 50% of the total asset of the company that is financed by the shareholders fund. 50% of the total assets of the company that is financed by the shareholders fund, and this is how you have to solve the questions. Okay, I'm hoping that everyone just understanding this, right? Okay, I hope it is understandable for everyone. Next, cost of goods sold are given, closing stocks are given, excess of the closing stock over opening stocks are given. So what is the inventory turnover ratio? Whenever we're talking about the inventory turnover ratio, you have to understand we actually talking about the ratio of the cost of goods sold, and it would be divided by the average inventory. Okay, so cost of goods sold, and it will be divided by the average inventory. So when we talk about the cost of goods sold is actually given here, that is 1,50,000 rupees. Now, but you need the average inventory. Whenever you're talking about the average inventory, you have to understand, whenever we talk about the inventory actually comes in the inventory comes in the financial year two times. The one time, that is the opening stock, another time that is known as the closing stock. Okay, so whenever we have to just write, we will write here that is opening stock plus closing stock, and it would be divided by the two. Okay, so now you can understand, we having the closing stock value, but we just do not having the opening stock value. The data given for the closing stock, that is 60,000. Okay, and the excess of the closing stock over opening stock, that is given. That means closing stock minus opening stock, that is given the 20,000. So this you have to calculate. That means opening stock, that would be value of the 60,000 minus 20,000, that means 40,000, right? So that means closing stock value, that is 60,000, and the opening stock value, that is 40,000. So this would be just make like this, 1,50,000 divide by the 60,000 plus 40,000, that means 1 lakh, and 1 lakh divide by the 2. So this will make the 50,000. So your answer, that would be 3:1, or you can also say that the 3 times. Okay, So the correct answer that would be the second for this question. This is how you have to solve the questions. Okay, I'm hoping that everyone just understanding this, because here it is given excess of the closing stock over opening stock. That means the information is giving for the closing stock minus opening stock, that is 20,000. Okay, because the difference is given of the closing stock minus opening stock, so that's why we have taken here, right? Next question. A certain sum of money at simple interest amounts to 1,260 in 2 years and the 1,350 in a 5 years. So the rate percent per annum you have to calculate. Okay, look, whenever the questions you get like this, like a certain sum of the money at simple interest amount to this in the 2 years and the amount to this like in the 5 years. So now you can understand, basically in the 3 years, like how many amounts, like increment of the how many accounts. So you will see here that is this is 1,260 and this is 1,350. That means in the 3 years you are just going to get the 90 rupees. That means for the 1 year you will get the 30 rupees as an interest. I think it is understandable for everyone. Just try to understand, for the 2 year the amount is given 1,260, for the 5 year it is given 1,350, and we are talking about for particular sum. That means for the for particular sum, if we talk about, like in the 2 years it will become the 1,260, in the 5 year it will become the 1,350. That means in the 3 year it is the addition of the plus 90 rupee. Okay, that means in the 1 year 30 rupees interest the customer is getting, because we are talking about the simple interest only. Okay, so that means in the 1 year 30 rupees. That means when we talk about in the 2 years the sum is of 1,260. That means for the 2 years customer is actually just receive the 60 rupees of the interest, right? That means the principal, what would be the principal here? That principal would be the 1,260 minus 60 rupees as an interest. That means this would become the 1,200. That would be your principal, right? I think it is clear for everyone. Now if I have to find out the rate of interest, just try to understand like this. Like we having the rate of interest, like in the like interest, we having the interest amount that is 60 rupees, just right here, and the principal that is 1,200. Rate of interest multiplied with the time period, that is 2, and it would be divided by the 100. It is nothing but the formula, that is interest is equal to principal multiplied by the rate of interest multiplication by the time, and it will be divided by the 100. Okay, so now if I have to just solve this, you will just get here the value, that this would be divide. Okay, and this would become the r is equal to, this would become your 2.5. Okay, or you can also understand as a, I think some mistake has been done, just a minute. uh, this you have to find out the rate percent per annum, right? So this would be your, this would be your 2 years, this would be 1,200, that would be your interest. Okay, that would be your interest amount. So I think this would be your rate of interest, that is 2.5. Okay, this is not 25, this is 2.5. Okay, that is something wrong, it is given here. The correct answer, that would be rate of interest, that is the 2.5%, not the 25%. There, I think some typing mistakes there. Okay, so that would be the correct answer for this, that is the rate of interest, that would be the 2.5%. Okay, so this is how you have to solve the questions in the examination also. I hope it is clear for everyone here, right? So we are just talking about, like, you will get the courses in the bilingual as well as the English medium batches, as well as the English medium batches you are just going to get on the Adda 247 store. What you have to do, you have to simply apply the code Y422, because with this code you are going to get the big discount over this, right? When we talk about the test specs, because it actually gives a final test to preparation, from the test specs you actually have to know like in which areas you still have to work on, you still have to prepare for. Okay, so with the code of the Y422S, you just have to add S after this code Y422, you have to add the S after that. Okay, and you are just going to grab the 17% of the, like, on the this test spec. Okay, so just grab this opportunity, because now the exam, now the very less time that is remain for your exams. Okay, So thank you everyone for watching me here. Thank you just joining me here. Just do not forget to join me every day at the same time. Like this video if you're liking our effort, liking our content. Okay, so thank you everyone for joining me here.